Disability insurance is crucial for financial protection if you're unable to work due to injury or illness. It safeguards your income, helping you maintain your living standard during tough times. My disability insurance is with Principal Financial Group. The monthly benefit is 60% of my current gross income. Benefits last until retirement age 65, or if I can work again. The disability must be from a covered accident or illness, preventing me from doing my job's main duties. Exclusions include self-inflicted injuries, pre-existing conditions, and risky activities. The policy offers a tax-free income if I can't work. It makes sure I can pay bills like the mortgage. It protects my retirement savings and gives me peace of mind knowing I'm financially secure. The premium is around $1,800 per year. I also considered Social Security Disability Insurance, SSDI. It provides federal benefits to people who meet strict requirements, and approval can take months or years. Employer-sponsored disability insurance might offer coverage through work, but benefits and payment duration are often limited. When considering disability insurance, firstly, consider your income and expenses. Decide how much income you would need to replace if you became disabled. Secondly, research different carriers and policies. Compare coverage options, premiums, and exclusions to find the best fit. Thirdly, seek professional advice. A financial advisor or insurance agent can guide you and ensure you have enough protection. Disability can happen to anyone, so protect yourself and your financial future with disability insurance. Disability insurance replaces a portion of your income if you cannot work because of an illness or injury. No one expects to become disabled, but it happens. Just imagine not being able to work for months or years. How would you pay your bills? Disability insurance can help. There are two main types of disability insurance: short-term and long-term. Short-term disability insurance typically replaces a portion of your income for a few months up to a year. It usually covers things like pregnancy, recovery from surgery, or a short-term illness. Long-term disability insurance replaces a portion of your income for a longer period, such as several years or until retirement. It covers more serious illnesses or injuries that prevent you from working for an extended time. When choosing a disability insurance policy, consider several factors. Firstly, the elimination period. This is the time you must wait after becoming disabled before benefits begin. A shorter elimination period means you'll receive benefits sooner, but your premium will likely be higher. Secondly, the benefit period. This is how long you'll receive benefits. Options range from a few years to until retirement. A longer benefit period provides more security, but also increases the premium. Thirdly, the benefit amount. This is the percentage of your income that the policy will replace. Most policies replace between 50% to 70% of your pre-disability income. Remember that the benefits you receive are typically tax-free if you paid the premiums with after-tax dollars. Fourthly, the definition of disability. Some policies have a more restrictive definition of disability than others. Look for a policy that defines disability as being unable to perform the duties of your own occupation, rather than any occupation. This provides broader coverage. Fifthly, exclusions. Disability insurance policies typically have exclusions for certain conditions or activities. Common exclusions include self-inflicted injuries, pre-existing conditions not disclosed on the application, and disabilities resulting from illegal activities. It's important to carefully review the exclusions before purchasing a policy. Sixthly, riders. Riders are optional features that you can add to your policy to customize your coverage. Common riders include a cost of living adjustment rider, which increases your benefit amount over time to keep pace with inflation, and a residual disability rider, which pays benefits even if you can still work part-time but have a reduced income. Consider your individual circumstances and needs when deciding whether to add riders to your policy. Here are some additional tips for purchasing disability insurance. Shop around and compare quotes from multiple insurance companies. Work with an experienced insurance agent who can help you understand your options and choose the right policy for your needs. Be honest and accurate when completing your application. Failing to disclose relevant information could result in your claim being denied. Review your policy annually to ensure that it still meets your needs. As your income and expenses change, you may need to adjust your coverage amount. Disability insurance is an important part of a comprehensive financial plan. It protects your income and helps you maintain your living standard if you become unable to work. Don't wait until it's too late to get covered. There are several factors to consider when determining how much disability insurance you need. Firstly, calculate your essential monthly expenses. This includes your mortgage or rent payment, utilities, food, transportation, and other necessary expenses. Secondly, determine your current income and how much of it you need to replace if you become disabled. Most disability insurance policies replace between 50% and 70% of your pre-disability income. Thirdly, consider any other sources of income you may have, such as savings, investments, or Social Security disability insurance benefits. Fourthly, factor in the elimination period of the policy. The longer the elimination period, the more savings you'll need to cover your expenses until benefits begin. Fifthly, account for inflation. The cost of living will likely increase over time, so it's important to choose a policy with a cost of living adjustment rider to ensure that your benefits keep pace with inflation. Sixthly, seek professional advice from a financial advisor or insurance agent. They can help you assess your individual needs and determine the appropriate amount of coverage. In addition to disability insurance, there are other options to consider for protecting your income. Emergency fund. Having an emergency fund can help you cover unexpected expenses and bridge the gap until disability benefits begin. Workers' compensation. If you're injured at work, workers' compensation insurance may provide benefits to cover your medical expenses and lost wages. Social Security Disability Insurance (SSDI). SSDI provides benefits to individuals who meet strict eligibility criteria and have a disability that prevents them from working. Life insurance. While life insurance doesn't protect your income if you become disabled, it can provide financial security for your family if you die. Long-term care insurance. Long-term care insurance can help cover the costs of long-term care services such as nursing home care or home health care. Disability insurance can be purchased through several sources. Individual policies. You can purchase an individual disability insurance policy directly from an insurance company or through an independent insurance agent. Employer-sponsored policies. Some employers offer disability insurance as part of their employee benefits package. Association or membership-based policies. Some professional associations or membership organizations offer disability insurance to their members. When comparing disability insurance policies, be sure to consider the following factors: the definition of disability, the benefit period, the elimination period, the benefit amount, the exclusions, the riders, the premium. It's also important to read the policy carefully and understand the terms and conditions before purchasing coverage. Disability insurance is a valuable tool for protecting your income and financial security. By considering your individual needs and circumstances, you can choose the right policy to provide you with peace of mind. Understanding the intricacies of disability insurance can be a complex task. It's not just about signing up for a policy, but about truly understanding what it covers, what it doesn't, and how it integrates with your overall financial planning. Let's delve deeper into some crucial aspects. The definition of disability is paramount. Policies vary significantly in how they define disability. Some policies use an own occupation definition, meaning you're considered disabled if you can't perform the essential duties of your specific job. This is generally more favorable. Others use an any occupation definition, meaning you're not considered disabled if you can perform any job, even if it's different from your usual one and pays less. There's also a modified own occupation definition, where it pays if you cannot perform the duties of your occupation, but only for a certain period of time, after which it switches to any occupation. The waiting period, also known as the elimination period, is the time between when you become disabled and when your benefits start. Common waiting periods are 30, 60, 90, or 180 days. A shorter waiting period means you'll receive benefits sooner, but it also translates to a higher premium. Consider your savings and ability to cover expenses during this period when choosing a waiting period. Benefit duration is another key factor. Policies can offer benefits for a specific number of years, such as 2, 5, or 10, or until a certain age, like 65 or 67. Some policies even offer lifetime benefits, but these are generally more expensive. Think about your age, career trajectory, and potential for recovery when deciding on the benefit duration. Residual or partial disability benefits are essential. These benefits kick in if you can still work, but your income is reduced due to your disability. For example, if you can only work part-time or take a lower-paying job because of your disability, a residual benefit can help make up the difference in income. Look for policies that offer a robust residual benefit component. The cost of living adjustment, or COLA, is a rider that increases your benefit amount over time to keep pace with inflation. This is particularly important for long-term policies, as the purchasing power of your benefits could erode significantly without a COLA. Ensure that the COLA is compounded, not simple, to maximize its effectiveness. Guaranteed renewability and non-cancelable provisions are vital. A guaranteed renewable policy means the insurance company cannot cancel your policy as long as you pay the premiums, but they can increase the premiums for all policyholders in your class. A non-cancelable policy means the insurance company cannot cancel your policy or increase your premiums as long as you pay them on time. Non-cancelable policies provide the most security. Tax implications are crucial to understand. If you pay your disability insurance premiums with after-tax dollars, your benefits are generally tax-free. However, if your employer pays the premiums, or you pay them with pre-tax dollars, your benefits are generally taxable. This can significantly impact the amount of income you actually receive. Consider the integration with Social Security Disability Insurance, SSDI. Some disability insurance policies are designed to integrate with SSDI. This means that if you're approved for SSDI, your disability insurance benefits may be reduced. However, the total amount you receive from both sources will generally be close to the amount you would have received from disability insurance alone. Understanding the claim process is essential. Familiarize yourself with the insurance company's claim procedures, including the documentation required and the timeframes for processing claims. Be prepared to provide detailed medical records and other supporting documentation. Consult with a financial advisor or insurance broker. A qualified professional can help you assess your individual needs, compare policies from different insurance companies, and navigate the complexities of disability insurance. They can also provide ongoing support and guidance as your needs change over time. Consider layering your coverage. Depending on your circumstances, you may want to consider purchasing multiple disability insurance policies to increase your overall coverage amount or to provide different types of benefits. For example, you could have a short-term policy to cover immediate needs and a long-term policy for extended protection. Be wary of group disability insurance offered through employers. While these policies can be more affordable, they often have limitations, such as lower benefit amounts, shorter benefit periods, and less favorable definitions of disability. They may also be tied to your employment, so you would lose coverage if you leave your job. Consider supplementing group coverage with an individual policy to fill any gaps. Review your policy regularly. As your income, expenses, and family situation change, it's important to review your disability insurance policy to ensure that it still meets your needs. You may need to adjust your coverage amount or add riders to reflect your changing circumstances. Understand the exclusions and limitations of your policy. All disability insurance policies have exclusions, which are conditions or activities that are not covered. Common exclusions include pre-existing conditions, self-inflicted injuries, and disabilities resulting from illegal activities. Be sure to read the policy carefully to understand what is and is not covered. Disability insurance is not a one-size-fits-all product. It's essential to carefully consider your individual needs and circumstances when choosing a policy. By taking the time to understand the different options available and seeking professional advice, you can make an informed decision and protect your income and financial future. Remember, the peace of mind that comes with knowing you're protected is invaluable.